What's up, Travis?
What's going on, bro?
I'm good. Finally, long time no see.
Yeah, I feel like it's been since last year, bro.
It's probably been exactly, I know, right? So yeah, just been busy, came from Colombia, YouTube stuff, like all this and that and that. Not too many people were joining meetings, basically no one. So finally, literally, I think it's the first one since like middle of January or something like this, but glad you joined. Finally, we can go over the, how's it called? How's it called? We can go over the reasons for investing, or I already forgot on the topic. But
You're good, bro. I know how it is.
but I
It's
have my investing
it's
goals. Investing goals, yeah.
what's the weather like in Canada today?
Normal, I know, -9 Celsius, -10 Celsius. I don't know what
Yo,
Celsius in
it's cold
Fahrenheit.
here today. It's cold here.
What's the temperature?
It's going to be -4 Fahrenheit this weekend where I'm at, which is pretty crazy.
-4. So
Fahrenheit, yeah. So I don't even know what that is in Celsius, but it's gonna be crazy.
So it's way less than -4 Celsius, I assume.
Yeah, and they canceled school. I haven't had school all week. I've been totally off teaching, which has been kind of cool. So
good. You have class today still, yes?
No, they canceled it.
Already canceled. Okay.
Yeah.
So yeah, let me even see what's the -4 Fahrenheit. I'm curious.
Thank you. Yeah.
It's -20 Celsius. Okay.
You see that often where you live?
In Canada, not too much because it's just my second winter. I think the coldest it's been, maybe yes, it was like around the same temperature, -20 Celsius, -4 Fahrenheit, but it happened just like once, twice. But in Russia, especially when I was a kid and stuff, when there was no global warming and everything, I think every single winter there were at least a couple of weeks straight when it was like -20 stable every single day.
That's crazy.
I think all the way to -35 was my very minimum. And minus 10 Fahrenheit, I guess, something like this.
That's crazy.
Yeah. So today,
Russia's cold, man.
No, it's cold, but it's not the coldest place where I've been. There are some like Siberian stuff and everything.
Right.
It's like -50 Celsius. And
yeah.
This is when it's actually really, really cold. But I don't know how cold tolerant you and everything. I think, in my opinion, everything below -20 Celsius just feels the same. It's just cold.
Right. Yeah. It's just brittle at that point, right?
So you don't feel a difference, like literally. -10, -5, 0, -15, -20. Yes, it's all different, but everything below -20 just the same. So basically, and yeah, in Canada, I think the lowest it's been maybe during the night, -12, -14 Celsius, which is like, I don't know, -1, -2 Fahrenheit or something.
Right. Yeah, that's weekend. Bundling up, man. We're bundling up.
Yep. Yeah. Today I'm inside my another room. My wife, which I still getting used to saying this, is doing her own like meeting at work and everything. So I don't have my microphone and everything. So audio quality is not the best. But
you're good. You're good. How's your investing going?
So far, so good. If you've seen my yesterday's post on Patreon, last month of January, it's like plus 3,700, something like this.
Nice.
I think it is one of the best months so far. Obviously, 1,600 of this is the deposit.
Right.
But still 1,800 basically capital gain in 1 month. It is like very good. I'm not going to say pocket money because it's investment still.
Right. Yeah.
Good additional.
One day it'll be pocket money.
I know. So far, so good. I've seen your post. I think, if I'm not mistaken, as well, January. I think you also did not bad. Yes.
Yeah, I've been getting about 20% each month, and about 10% of that is my deposits, and then the portfolio grow about 10% on its own. So that's like a good steady average I've been getting, which I'll take it for sure. I'm happy with that kind of return right now. So just trying to stay focused and diligent and not get too impatient and not get too greedy.
Yeah. that's the thing. Like you've seen all this Dogecoin and stuff. It was tempting. You've seen all the GameStop, AMC.
Right.
I never did any of those, but like obviously it was tempting and everything. I think our poor guy Ryan from also like Instagram, he said like he invested in all of these meme stocks, like at the very top of them. He bought like GameStop like 370, no, and basically all this kind of stuff. And now 60, I think. So hopefully, like unfortunately, it was a like life lesson for him not to go chase this all these returns and everything. I don't think GameStop is ever gonna be the same. I don't think.
No, he learned a good lesson. I had a couple friends that bought, I think, like 3 shares of GameStop right at $300.
Mm-hmm. That's the best, but the most expensive lessons.
Yeah.
It's not as expensive as losing a couple of grands or something like this.
Right.
But still seeing your portfolio lose like 80% in 1 week.
Right. Wasn't that the first rule of Warren Buffett is don't lose money, right?
Yes, basically, yes.
That's my number one rule too.
Well,
I don't want to hold the bag, I'm trying to make money. So
but there is no any other purpose of investing other than to make money. If you're investing and losing money, why you invest? Basically, yes.
Yeah, I get you, bro.
Yes. So this whole thing with the GameStop looks like it's settling down. Okay, because it's good for the markets, like because attention was basically all switched, all these meme stocks and everything.
Right.
Like it's more or less steady growth for like since the beginning of this week. Like I think even since last Thursday or something, it was pretty good, couple of percents per day.
Right, it's getting kind of crazy.
So yeah, let's see how long it's gonna last. Basically bought more ARK yesterday. I don't know if you've seen my page.
Oh, nice. How many up to?
How many shares I have?
Yeah, units. Yeah.
I can check. I don't think like more than 10 maybe. Let's see. I have my spreadsheet here and everything. Always like to keep track of everything, obviously. I bought when was it? On Monday. I bought maybe like 3 or 4 more.
Cool, nice.
And at this very moment, it's loading. At this very moment, I have 20 shares of ARK.
No, right? I got 20 also.
Perfect, good.
Yeah, I got 20.26 because I got a dividend, so I got a quarter of a share. And then I'm getting close to having 10 shares of Apple as well. That's my next one. I got 9. I got 9 right now, and I'm gonna have I'm gonna buy one more next week.
I have 15 shares of Apple.
Nice. That's very good.
I decided to since I don't know, I already told you this, I guess maybe. So since ARK is an ETF, there is no point for me to hold ARK the same proportion in my portfolio, which is like 5-7% of my total portfolio value, because it is an ETF. So that's why I decided to increase the weight of ARK in the portfolio all the way maybe until like 20, 30, maybe even percent. Right now, at this very moment, it's like 15% of my portfolio. So which basically means that for the next couple of months, I will be focusing on ARK. And then we see how it goes. Because my idea is that I know, for example, I'm holding, let's say, Intel. If Intel goes bankrupt and my whole position is like $0, I just lose 5% of my portfolio. Okay, it's like it's still a lot, but it's bearable. But if one company inside ARK goes bankrupt, and they have like 30 companies, I don't not even feel it. So basically increase the weight of ARK inside my portfolio. Same with Apple. Like I'm not expecting Apple anymore to like grow like triple digits or anything like this, but it's just good company, pays small dividends, growth more or less stable, and I'm using Apple basically almost everything. Apple headphones, phone, laptop. My wife is using basically all these kind of things. My friends, both in USA and Canada, and some of them all using Apple products. So I just don't see future without Apple, at least within our lifetimes.
Yeah. All the campuses I teach at have all Apple products. And I'm the same way. I used to have a lot less of a position on ARK, and I got it up to about 30%, which is a little heavy right now. I'm going to keep buying more Apple, and that'll come down. But like you said, there's so many companies within that, you can kind of have a little bit of a bigger chunk. So
So yeah, most likely I will keep ARK around 23%, obviously because my favorite number. No any other reason behind this, just besides it's my favorite number. Apple,
Right. Yeah.
yes, Apple maybe I'll keep maybe around 10%. And I also want to keep Corsair and renewable energy maybe around, it's also close to 10% each. Because,
Very cool.
well, I basically explained in Patreon, but long story short is that renewable energy is the, I don't know, it sounds cliche, but everything, well, it's the future, renewable energy and everything.
Right.
Biodiesel, I know, pretty good chances of becoming, and this renewable energy is so undervalued. It's like just the PE ratio is like 3 or 4 or something like this, and the company is actually pretty good, profitable. Like revenues are growing, income growing, like there's not too much leverage, and
right. Look healthy.
No one talks about it. Like literally, this is the company that my father found somewhere, I don't know, on the internet like half year ago.
That's cool.
Just bought it.
Very
So
nice.
it's this company I found because just my father showed me it. So I don't see any articles. I don't see any YouTube people talking about this, which basically means if people are gonna notice this company and they're gonna start talking about it, maybe it's gonna just explode and everything. But it's been going so far so good already. So yeah.
Good, man. Good. I've been loving my solar. I got a solar play and it's up 50% today. I mean, like total, so I'm happy with that, I've opened up brokerages or accounts with all of them, like TD, Ameritrade, Fidelity, Charles Schwab, so I can get all of their reports and check out what each of them say. And the long term, like 2+ years is just so promising, so good long-term play, no doubt, and still doing really well in the short term.
Solar energy, yes, also tempting for me. And when I just started to learn things about investing in solar related companies, when I didn't even know about ETFs and everything, this was my first idea to invest in, because I thought like, okay, solar energy is going to be the future, or at least a very big part of future.
Yes.
But still haven't invested in any of them, even though I'm still open. What I'm looking right now at, I have like maybe 20 companies opened. Like I have, so, and you hear it first here, 3 new things, and you hear it first here, and like none of the other people, because they didn't join this and everything I didn't say in my Instagram group chat. So you heard it first. I am thinking seriously about 3 things. First thing is that maybe next month I'm gonna add semiconductors company, because I see it on the news everywhere, like shortages of conductors for cars. I don't know, car manufacturers, Ford, Tesla, all of them, they're forced to limit their production because there's just not too much semiconductors. And so,
have you seen SOX, SOXX, or
ETF semiconductors, you mean? Yeah. Yes. It is one of my possible investments, is just to take this ETF, but I think the expense ratio is like 0.46%, which is a little bit high, but okay, acceptable. So besides this, I have like a couple of companies, like 5 or so companies, individual companies opened, which I will analyze basically during this month. So what I'm saying is that maybe next month I will add semiconductors company inside my portfolio. I'm expecting, obviously, if there's shortage, it means that they can either maybe increase the prices, or they can maybe increase the production, and both of these decisions will increase their revenues basically massively.
Love it. So my wife has an account too, and whenever I share the portfolio, it's just mine. But between me and her combined, semiconductors are definitely our biggest positions. We're very heavy into semiconductors.
You have ETF?
We have stocks. We do stocks.
Okay.
And combined, we've got probably close to 30 shares of it. That's really good.
Yes, if I don't see any of the companies as a 100% leader among the other ones, maybe I'll just buy an ETF as well. But like I said, I'll just keep looking. I'll analyze the companies and stuff like this, and then news.
I saw you put MU on your watch list.
Yes, MU I just put it, but this watch list, when I just created it, it was before I found all the other companies, which I can basically tell you right now if you want. So first one is SOX, like you already mentioned. Another one is NXP Semiconductors.
Okay.
It looks like it's one of the biggest ones. So second one is Micron, like the third one is Skyworks, Solutions. The fourth one is Cadence Design Systems. I know its ticker symbol is CDNS, Cadence, CDNS.
Okay.
And the last one is, well, my Firefox crashed. So the next one is Marvel Technology. That's it. 5 individual companies and 1 ETF to consider. And these 5, I already like kind of pre-selected them. I had like maybe 10, 15 of them. And I just did quick glance on the financial statements, and all the other, they had pretty bad financial statements. So, but these 5 are the ones which I want to explore more in deep.
So. Come on in, man. The semiconductors are where it's at. There's room for you over here.
I know. So that's the first thing. Second thing that I might add in my portfolio within the next couple of months is one of the lithium companies.
Oh, nice.
Lithium ETF.
Yeah, I got lit.
Yes,
LIT.
Yes.
I just bought it. I haven't had it that long. It's my newest play. I have 15 of them, and it's up 5% so far, so it's not too bad. But that's probably my newest like bulk purchase. But the long term on that one's going to be really nice too, I think. That's kind of my EV play. I didn't really want to do more Tesla, and so I just did lit, the ETF, and that's kind of my EV. Just I want to be in that space,
Basically the same. Everyone is talking about NIO, Tesla, about all these car electric vehicles producers, but very few people are talking about lithium, basically what needs to be grown
yes.
in order to maintain this output of electric vehicles.
Cool. So I had a good luck with TAN, and that's like the source of the energy. And since I do semiconductors as well, I was like, let's do the lithium or the source of it, like the batteries and stuff. So that's cool, man. Yeah, we seem like we're into the same, we're going the same places, which I like.
That's very good. That's perfect. Hopefully we're gonna end up on the winning side eventually.
Yeah, that's right.
So we take it slow but steady. We don't invest in all this, like Doge coins and stuff. We avoid this 900% per week returns, but hopefully from perspective it will pay out. And from lithium stuff, yes, I do have this lit ETF basically, but I have like 10, 15 maybe individual companies, which I haven't even seen their financials yet. I just basically opened like 30 companies at first, and then I saw which of them my broker has, Simple has. And I was pretty surprised that like more than half of them were accessible on my broker. I'm sure that Robinhood has almost all of them, but for now, it will take lots of time to just tell them all. So I don't know, but if you want, you can write them down. So it's Lithium Americas.
Okay.
You're gonna write them down? So
yeah, I got my watch list open.
Okay, so first one is Lithium Americas. And by the way, as soon as I basically analyze all these lithium companies and what was the previous one?
SOX, or the semiconductors.
And semiconductors, as soon as I analyze them more in details, whatever I choose, like top 2, top 3, I will put on my next month's watch list. So it will go just for March. But like I said, I don't mind sharing with you right now. So first one is Lithium Americas. The second one is Livent. I don't know how to pronounce this, but the ticker symbol is LTHM. Livent.
Yeah.
The next one is FMC, and the ticker is basically the same, FMC. Okay, the next one is probably you heard about this Chilean chemical company, which is Sociedad Química y Minera de Chile, but its ticker symbol is SQM. SQM. The next one is Albemarle Corporation. The ticker is ALB. ALB. Okay, so the next one is Frontier Lithium. The ticker symbol is FL, but it's on Canadian stock exchange, so I'm not sure if you have access to this one, but it's Frontier Lithium.
Yep, I see that.
Yes. The next one is Noram Ventures. The ticker symbol is NRM. Noram Ventures. Okay, the next one is First Quantum Minerals Limited. First Quantum Minerals Limited. Toronto Stock Exchange, so I'm not sure if you have it. Ticker symbol is FM.
Yep, I've seen them.
Yes, the next one is Pure Energy Minerals. Pure Energy Minerals. So Canadian company looks like. The next one is Standard Lithium.
Yeah, okay.
The next one is Cypress Development Corp. Also Canadian looks like. And the next one is Power Metals Corp. And the last two are like penny stocks kind of, because last one is like 42 cents per share.
Okay.
So I just saw like right now, so it was 42 cents per share and it was saying up 7%. So then it ticked to 0.41 cents per share and it's minus 238 already.
Pennies, man. The penny ones are crazy.
Basically in one tick, you lost like what, 9% of your value.
It's just like those.
So basically last two, like third to the last is also $4.
Right.
Noram Ventures is also 85 cents. Frontier Lithium is $1.
Yeah.
So yeah, some of them are kind of penny stocks, but it does matter. Like if the financials are good, I expect obviously high volatility and everything. But if the financials are good, the forecast is good. If there is like lots of orders for lithium by anyone who are like Tesla or whatever.
Yeah, man, and that Frontier Lithium, it's small, but it's got a lot of volume. I'm showing Charles Schwab shows it has almost 2 million, which is, you can make some good money if there's a lot of volume going. So
yeah, so looks like this Frontier Lithium just today got 23%.
I see that. That's probably why that big volume. Someone bulk bought a bunch. It looks like, but yeah, that's cool.
80%, 80% in five days.
That's crazy.
And 128% in 1 month.
Have you ever checked out Autodesk?
Autodesk? I don't think so. What is this?
I'm looking at them as a potential. I think they're a little overvalued, unfortunately. I think the rest of the company looks good as far as the future outlook, the growth, the the quality of the company, the stability of the company. Their financials are okay. I mean, they're not the worst I've ever seen. But I do think they're slightly overvalued. But they do it's like 3D and also engineering and construction, and it's kind of like Adobe, It's kind of like a company like Adobe, but it's for they make the Maya software, which is a 3D rendering, and then AutoCAD. So it's a little bit more like less creative, but more engineering, a little bit more practical, I guess. But I don't know. It's a software company. They make, creative tools. So I don't know. It looks like a good buy. I mean, if it was a little bit cheaper, it'd be nicer. But I mean, all things considered. So I didn't know if that one had ever crossed your list or anything like that.
I heard about it, but never took a look at it. So I have it opened here. So basically, I'll take a look at this later.
Yeah, there's a couple others I'm maybe looking at. Affirm. Have you seen that one?
Affirm?
Yeah, it's kind of like a financial. It's kind of like a Square / PayPal thing. It just IPO'd not too long ago, and they do so in America. I don't know if they have it in Canada, but like if you go to a website and you want something, you can buy it in payments now, install payment plans, and that's what Affirm is. So it's like if you want boots and they're $200, you can buy your boots at $50 in 4 payments through Affirm.
I've seen it. Yes, we have it as well. Yes.
Yeah, so that might be a potential one. I'm watching that one because I feel like that might be good later moving forward. So got that one on my watch list.
The idea is good. behind the company, that you don't need to spend everything at once. You can just do installments and everything.
Yeah.
Idea is good. I already like it, but yeah, I will need to take a look at this financial everything.
I don't have any, but it's on my watch list. It could be some potential. I definitely think the fintech is going to be big too, you know. So I saw you had PayPal on your list. PayPal's been doing really good this week. I don't know if you saw, they've had a killer week.
I've seen it, yes.
Yeah. Well, let's get started on this lesson, my man.
Yeah, let's do it. And the last third thing, this is definitely, you heard it from.
Yeah.
I just deposited $250 in my potential crypto account. So
love it, Artem. Hey, just do Bitcoin. The others are noise.
That's what I'm most likely going to do.
Yeah.
The thing about this, I was so basically I'm doing my YouTube and stuff, and I do my short, straight to the point videos. And so right now, I'm in the section of cryptocurrencies basically, because I always try to keep my videos more or less in logical order, even though they're not connected. But let's say, so if I start talking about cryptocurrency, the next video is going to be about Bitcoin, the next is going to be about Dogecoin, the next is going to be about, so it's kind of in logical order. And
like a series.
And so I started researching this stuff, and it kind of started to make sense to me.
Same. Yeah, man. There's something to it. What I'm doing, like I kind of looked at some of the other ones, and I think I'm going to go back to just Bitcoin only and just focus on the one. I'm going to do like 7 to 10% in Bitcoin. That's what I think. Like, I think I'm going to hold a little bit. I'm not going to go like crazy, like put half my money into it or whatever, but I feel like it needs, you know, a spot in my portfolio that's maybe 7 to 10% of the total allocation. You know, just it's better to have some than none, the way I look at it, you know.
Even less for me. I just want to keep for now 1% of my portfolio. Just 1%. So
Kathy Wood in the big ARC innovation, she said that 7% was a good if you had like more of a risk tolerance, and she says for those more conservative, 1 to 4% is where they should be. So
I'll keep 1 for now. Because like I said, I just did the research, and Tesla announced, you know what they announced basically, and now Apple is thinking about the same. So right now it might be overvalued. Maybe it will drop like 5,000, 10,000 within the next month while this thing settles down. So maybe if they drop, maybe I'll increase to 2%. So basically I'll just put 250 more. Maybe if it drops, then I'll keep 2% of my portfolio in crypto. But for
that's a good idea.
Just 1%, if it keeps going up, that's it. I'll just most likely never buy more of it, and we'll just keep it as like 1% of my portfolio, maintain if possible, and let's see how it is. And this is the money that I'm kind of ready to lose. Like,
it's definitely play money.
250 is a lot, obviously, but it's just 1% of my portfolio, so it's okay. Let's say so.
Right. Yeah, man, I'm happy to you're considering it, and I definitely feel like it's a good place to be. In my personal opinion, I feel like people who have no crypto it's just as bad of an idea as having all of your money in crypto, you know? So you don't want to be on either side. I feel like you want to be somewhere in that in between, you know?
No, definitely no. One last thing what I wanted to say. And I still don't buy crypto because I can value it or anything like this. So I still keep my mindset about crypto. I was thinking about this all the time. I don't see.
I'll eat something after this. I'm sorry, I'm talking to my wife. I'll eat something after.
Okay, take time.
I just said I'll eat lunch after when I'm done. It's fine, baby. I'm not hungry right now.
So what I was saying is that I still follow my mindset about the cryptocurrencies, is that there is no intrinsic value of them. Like, there is no financial statements. You cannot predict based on the numbers how it's going to be in the future. Everything what we know about cryptocurrencies and everything is based on the speculations that it is going to be the next international currency, to be widely accepted. This is going to be this, that. So all the value it gets from is basically speculations, and if the governments allow it and stuff like this and that. So obviously I cannot, at least me personally, I cannot calculate, I don't know, the intrinsic value, and I cannot predict what's going to be the price 10, 20 years from now, like I kind of maybe can do with the stocks. If I see that the company is being profitable for the last 5 years, most likely it's going to be profitable, and most likely it's going to be more expensive 5 years from now on as well. The same thing I cannot do with crypto. But just based on speculations, I see that people accepting this cryptocurrency more and more.
Right.
Institutional investors, they start talking about this, and you know how it works. Whenever institutional investors, they don't talk about whenever they deny cryptocurrency, maybe they start buying it. But whenever they start saying that we start looking at cryptocurrencies, it means that they're finishing to buy it. But whenever they say that, okay, from now on, we're going to start buying cryptocurrency, it means that they already bought it. And this will basically pump the market, crypto market, and all this will basically triple in a couple of months. So right now, I think we're at the stage where institutional investors, big companies, and maybe some universities, even I've seen some articles. Remember, one of the universities accepts crypto or something like this.
Yeah, they're starting to add it to their endowments, bro.
So yeah, basically, yes. But long story short, I think I can be right, I can be right, can be wrong. Right now, I think we're at the stage where big whales of the Wall Street and basically big people, big players in finance world, they already start buying crypto, but they're not announcing it yet. So short, maybe, just maybe in the future when they announce it, and then we can double our money quickly or something.
Oh, so no doubt.
Let's see.
I think if that rumor is true, it'll go again, you know. Jump right up.
But right now, for better or for worse, my payment is still being deposited. Well, simple text to 5.
No, it took me forever to get approved on some of those crypto apps. Like I'm talking like 4 weeks, 6 weeks on some of them. Like I'm not lying. Like I started on Binance. I don't know if you've heard of that one yet.
Yes.
Like at the start of January, and then I didn't get approved until like a week ago. It took like 5 weeks. So there's things about it that I don't like, you know, the fees that they charge, I'm not into. You know, you can get ate up on those, which is not cool. Like you go buy a stock for $0, you know, zero fee, which I love. So, you know, and also like you said, you know, I get the balance sheet stuff that you're talking about, but, you know, companies like Apple also give a lot of people jobs and, you know, employ people and
that's the thing, yes.
Right. Bitcoin doesn't have a lot of that. So, you know, I kind of do like to prefer to still invest in the companies because I feel like they do a little bit better for the world, you know?
So basically, yes, first reason is just the speculations, why I guess most of us are investing. And the second reason is to finally stop having this fear of missing out. Finally stop having this FOMO. Everyone is talking Bitcoin, like I should have bought. Now I have 1% of Bitcoin, for example. That's it. I will only appreciate all these articles saying Bitcoin tripled in 1 second.
Here's what I feel like too. I have a little bit also, and you know, it's actually like I think I'm up like 50% on it or something. So it's been pretty good for me. But anytime it goes up or whatever, I don't have that FOMO just because I have a little bit of it. You know,
exactly.
Like, I'm like, I mean, I kind of wish I had more, but whatever. You know, at least I have some. So I don't feel like just having a little bit of your foot and your little toe in the pool is enough to stop caring about all the noise. You know, cause I'm in on it. So
this was one of my reasons as well. Like I said, why I just did it, and like, okay, now I can forget about it.
Exactly, I have more peace of mind now,
and I can focus more on proper investing, basically.
Yes, 100%, for sure. Yep.
So these are 3 updates that you heard the first.
Yeah, dude. Well, it sounds great because it sounds like we're kind of on the same brain wave, which is nice. So I like that.
It is nice. It means that looks like we kind of do correct thing.
I think we're smart people, or some smart fellows. I think we're going to do just fine.
Hopefully.
It's looking good. It's looking promising so far.
So yeah.
I'm happy for you, man. That's a lot of updates. I love it.
So thank you. Happy for you as well. Cold. You're growing a beard.
Yeah, dude. I feel like I've kind of found my way. I mean, I'm still very new, but I feel like I'm starting to find my voice as an investor. Where you know, it's a very deeply personal experience. You know, and you know, definitely didn't get sucked into the GameStop hype, which was good. Stood my ground. So
yes.
yeah, I've learned a lot of lessons lately. I'm feeling good about it.
That's why I have to, since the beginning, decide who are you, investor or trader, and basically then if you break the promise, basically you just break promise to yourself first.
Yeah.
So like
100%. The discipline is important. I agree.
And that's all there is to it, I guess. Let's do quick goals of investing.
Oh yeah, let's talk about it.
Okay, so you can, I guess, I don't know, maybe even keep the microphone. So today we can kind of keep it a bit dialogue style.
Sweet, yeah.
Because all the time when I'm doing monologue, it's kind of getting boring, maybe closer to the end, even though I like investing in it. But just keep it.
Yeah, two-way street.
Yes, exactly. Okay, so yeah, I guess you already see that now. So basically, oh yeah, exclusive meeting 120. So this was supposed to be the topic for January 13.
Okay.
Maybe even before this. So like 1 month ago, but doesn't matter. We still will
still a good lesson.
Yeah. So yeah,
evergreen content, man.
Evergreen. Why I should invest? So yeah, let's see if I can. And by the way, I did my new Zoom, how's it called, like meeting. So you were able to join today without me approving you, I think, yes?
Cool. Yep, I was.
So you were able to join without me approving. So I finally solved it. Yes, looks like.
Yeah.
Perfect. Okay. So yeah, why you should invest: short-term goals, medium, long-term goals, passive income from dividends, investing for retirement, different investment accounts. And then I don't know if you have any questions in the end, we'll go over them as well. And now I also figured out why when we are just the two of us in Zoom, there is no limit. Basically,
that's cool. Nice.
There is no limit. When there is only 2 people in Zoom, there is no limit, even though you have free version. But look, cool. If there is more than 2 people, then they still have this 45 minutes limit. So yes, why should you invest? Investing is easy, should be done by everyone. I guess you already can see it. You already feel the benefits of this. Just extra $2,000 per month from time to time is very good money, basically. So, and there are short, medium, and long-term goals, obviously. Investing gives you passive income. Investing can take as little as 2 minutes per month. If you're investing in ETFs, and I guess you can confirm it, let's say if your portfolio has, I know, 3 ETFs, one like S&P 500 ETF, another is ARK, and another one is, I know, lithium ETF, and that's it. So basically every single month you just buy a little bit of more of each, and that's it, you're done. No need to analyze anything, nothing, very, very easy. Like literally anyone can do it. And especially because there are fractional shares. So you don't need, like you were texting me yesterday, you don't, like so many people think you need 10,000. You don't need 10,000. You can start with $50 and just create a habit. That's the whole thing. You just need to start slow just to create the habit of investing every single month. And that's it. And eventually you will start increasing the deposits. You'll start depositing more money, and basically you're going to be investing for long term from now on. Everything's going to be good. And investing obviously is good for retirement. This is my goal. This is, I guess, goal for many investors, long-term investors. You should just basically invest money for the retirement, and that's all there is to it. The shorter are the investment goals. Basically, the riskier are the investments. But this is common sense, basically, I guess, already at this point. Okay, first of all, short-term goals, several months, couple of years, good for raising additional capital for small expenses, like traveling, small purchases, like you can put in the 10,000, I don't know, in S&P 500 ETF, and let's say, so we have 2 perfectly normal years, nothing crazy happens. So basically you put 10,000, you get like 16% return, 8% in one day, in 1 year, 8% the next year, 1,600 you got from 2 years of investing without even adding any money. $1,600 you got basically from nowhere. $1,600 good for, I don't know, small expenses, traveling, purchases. I don't know, maybe you wanted something for a long time and it didn't require you anything, basically just to put money in one app, you know, Robinhood, Wealthsimple, whatever, and just wait for 2 years, and that's it. Very easy and riskier than long-term investing, but still kind of relatively easier. Small purchases, good for small purchases. Risky and unpredictable, like I said, therefore better be invested in fixed income securities, such as bonds. For example, I don't know what are the treasuries right now in the US. I think like maybe even less than 1% annual return, but this is cyclical. Sometimes they have like 2, 3, 4% annual return. Sometimes they have less than 1. So basically, if you want to buy and if you're in the good cycle, if you can perfectly match investing journey with just switching over to fixed income securities such as bonds, and then whenever your portfolio is, let's say, $3 million, you just buy bonds for all of these you spend all $3 million on bonds, is like even 3% annual return. And this is going to be like what, I don't know, like $90,000 if I'm not mistaken, something like this, like per year, which is pretty good in my opinion. And yes, this is short-term goals, risky, better be fixed income securities. And if you are young, like if we are young, obviously it's not very recommendable to do short-term investing or even middle-term investing. For us, I think we're pretty good right now, just invest in index funds, pretty good stable companies with good financials that are going to be profitable 5-10 years from now, hopefully, and we just keep our money this way, let them grow and don't touch them. Perfect. The next is medium-term goals, couple of years up to 10 years. And this can be good for like big purchases such as cars, tuition, stuff like this. Can be a combination of equities and fixed income at this point already. Equities is basically stocks. One of the first representatives of equities are stocks, and fixed income is the bonds, basically. So you can have like 50% on bonds, 50% in another one, and just have your maybe, I don't know, annual average return like 6%, by 5-6%. So if you put the same, I don't know, let's say, so $10,000 for 10 years and don't even touch it, it's going to give you, I don't know, like what, 5,000, like 50, no, I guess no, it's too much. 5% of one of 10,000 is like what, $500, I think, yes, $500. So in 10 years, it's going to be 5,000. So just to cover something. And whenever I was writing tuition, I was thinking about Russia because 5,000 tuition in America is like what, one class?
I mean, it depends where you're at, but you can maybe get like a semester,
So when I was writing this presentation, I was thinking about Russia because actually you can buy the whole year basically for 5,000 in some universities.
Okay, yeah. I mean, I think maybe here, like where I live, you could probably get, 17 weeks, which is like half a year. Real quick though, we're talking about the medium.
Yes.
The medium term goals. So like I think Kathy has said that her ETF is focused on like a five-year horizon, maybe up to 10. So I'm definitely planning on probably holding it, longer than that. But in about, if I started buying in 2020, maybe when 2025 comes around, I'll reevaluate that purchase to see how I assume they're going to keep updating it to be 5 years out always, but since they're more of a medium investing, I'm keeping my eye on that one a little bit closer than some of my others, is basically what I'm going to say,
Yes. And basically, yes, investing is not as passive as some people might think. Especially if you're investing, some of the companies are individual companies, it is pretty good to reevaluate your portfolio, your holdings, at least once per year, whenever companies have their annual reports, financial reports and stuff.
Right.
Maybe you don't need to keep track of them every single week. Maybe it's not even mandatory to keep up with every quarterly report or anything like this, but at least once per year, whenever this financial report, just open it, read it for the night or something like this.
Yeah.
To see if the goals, if the direction where the company is going is still the same when you started investing in it. Obviously, see if the financials are still demonstrating progress. And if everything is good.
I definitely feel like they're going to continue to keep like managing that company and that ETF well, but that might be a time to take some profits and reinvest them into other things, where we'll see how it's going. It might be my favorite one in 5 years. We'll see. I'm never going to sell. Yeah, we'll find out. But I have my eye on a potential 5-year, maybe taking some profit at that point. Or not, we'll see when we get there. But just wanted to put that on your radar. Yes. If you weren't aware of ARK's investment philosophy, they say about 5 years is kind of like as far as they're looking out. I mean, I'm sure they're looking farther than that as well, but that's like their horizon basically for a lot of the stuff that they're doing.
Now, what I think what they mean by 5 years is that all the companies that they have right now, but it does not mean that because these ETFs, these are not index funds.
Right.
Index funds are those ETFs which track basically indexes.
Right.
Exactly like company by company. But this ETF, which is actively managed, which means that, okay, if the company is not matching the right criteria anymore, they can just pick this one company and replace it with another one.
Right.
Add companies, remove companies. So I think maybe, at least hopefully, ARK as basically the whole, not just ARK K, which is innovations ETF. I hope that the whole ARK fund, the whole company, will stay relative with all of their ETFs, and they'll just, like I said, keep replacing companies, adding, moving companies as long as nothing is meeting the requirements. And I think, yes, like 5 years is what they're looking at right now with the companies that they currently have.
Cool.
From 5 years from now on, they might have something new, some new companies. So, and basically the process continues.
That's cool. That's cool. Yeah.
I hope it's going to be like this, most likely. Oh yeah. So medium term is this, and balance can be extended to a long-term portfolio, which I think when I was writing this is what I meant. So long story short, if you're investing for 5-10 years and you're doing pretty good and you do not need your money immediately, or for example, I know the tuition was covered because I know you were graduate assistant or anything like this, maybe your parents bought you a car, so now there is no need of these big purchases. You can just keep investing this and convert it to a long-term portfolio, basically by selling fixed income bonds and just buying almost like 100% of your portfolio made out of equity of shares, basically, and all this stuff.
Cool.
And finally, long-term goals, obviously the best type of investing, especially if you're young, and this is the only type of investments that you need to do when you're still young, I would say. I think you can focus on long-term investing if you're all the way like less than if you're younger than 45, you can do long-term investing. So obviously for us, being in our like young age and everything, definitely we need to only focus on long-term investing goals, which is 10 plus years all the way until the retirement. And this is investing goals for long-term investments are life purchases, something that's going to purchase like once, twice in your whole life, something that you buy it, and basically that's it. Like there is no need for money to save money anymore or something like this. And these are houses and no tuition for kids, maybe some like expensive exotic cars for your retirement, like just to chill, maybe just to pass the wealth down the generation, to give your portfolio to the kids and let them continue growing it and just live on dividends or anything like this.
Yes, yeah, dividend time at the end for sure.
So basically, yeah, imagine if your father started investing all the way in 20s and now you have like $50 million portfolio with like, and you just invested in, I don't know, high dividend safe stocks with like, let's say, so 4% annual return or something. So this is like what, 1/5, it's like $2 million in dividends every year. And I guess you can just chill at this point.
That's the goal. I'm trying to be a growth investor and then switch to a dividend investor once I have the growth. I think that passive income, you know, that's my kind of where my head's at right now.
I'm thinking about this as well. Right now, it's the combination of value stocks, some dividend stocks, and growth stocks. And I would say maybe value stocks and dividend stocks are the majority of my portfolio. Growth companies, I have like maybe 3-4 of them, something like this. I don't know, like maybe even less, like 2 of them, and like 1 ETF. So, but yeah, later I was thinking to maybe switch towards maybe, let's say, so when I'm like 40 plus or something, I can just buy, like literally sell everything and just buy a high dividend yield ETF. I don't remember which one is this. Just literally one position, and they have, like I said, 4% dividend yield. They do not grow as much, obviously. These are not growth stocks, so they grow like, I don't know, 4% per year. But because of dividend yield of 4% as well, you can basically add those things up. And this 8% growth per year. But the good thing about this is that when the markets are down, when the return is negative for everyone, you still receive most likely your 4% no matter what. So that's the thing.
Yep. Good strategy.
And yeah,
that Charles Schwab HD.
So, yeah, SH, something like this. Yes, I think something like this. And in the very end, like let's say so 50 plus, when I'm 50 plus and everything, maybe even switch completely even to sell dividend ETF and just maybe just buy bonds or something like this. Let's see how it goes. For now, I'm just focusing on the fun stuff. And yes, long-term investing perfect for retirement, as you can guess. In the beginning can be comprised, if this is the word, mostly of equities and need to switch towards fixed income securities at the end, which was I was basically talking about this right now. Because right now, if something bad happens, you still have time to recover. But imagine you are about to retire in 5 years, in 3 years, let's say so, and then there's like virus or something like this. 20-30% of your portfolio is gone in 2 months. Like it was like literally decades of work. So all this extra income, because like if you're just investing in S&P 500, like you get 8% return, but then you can invest in, let's say, so more or less safe bonds, which is like 3-4% return. And this extra 4-5% of return is not worth it to have an opportunity to lose 30% of your portfolio in 2 months. So I would just better maybe play it safe, lose this extra 3% of return. But I know that if the market crashes, I will still get my coupon payments, which is going to be always the same, like 3-4% per year annual coupon payments, and that's it.
That's right.
So this is about long term. Okay, passive income from dividends. Some companies pay dividends. What a surprise. In order to receive dividends, you need to hold stocks of a company for a certain period of time.
Well, how long is that? So Apple comes out tomorrow, and I had 8 shares of Apple, but I bought one yesterday. So that one yesterday, is that enough?
Most likely not. Most likely not, because I can even check right now while we're speaking.
I didn't think it would. I assumed it would get into the next one that comes in 3 more months. But I'm sure those other 8 that I have will be in time for sure.
Okay, I'll just share now another.
Yeah, and that is the question. Since I did buy one this week and they are coming out tomorrow, what's that look like?
So that's a good question. So this is the Nasdaq website. You know the Nasdaq analysis, yes? It shows anything you need to know about the dividends. This is all you need. Nothing else than this is needed. So this shows first of all what you're looking at is the, let's say, so you can see annual dividend here. So annual dividend is basically for every share that you buy, you will get 82 cents per year. No, this is self-explanatory. This shows how much is going to be paid on this base. I'm not using my mouse, I'm using touchpad, so hard to select. Okay, so this is what you need to look at. So for every share of Apple, let's start with this one, ex-dividend date. Ex-dividend date is the first that you need to look at. So this is February 5th, 21, correct? I can make it maybe. So ex-dividend date, what it means? It means that if you buy shares after this date, you will not be eligible to receive dividends on these shares.
Okay, so that was Friday. I bought it on Monday. So I got it on Tuesday. I got it yesterday. But okay, all right, that's cool.
So long story short. Next one. So yes, long story short, if you had 10 shares of Apple before February 5th, 21, you will receive dividends on all 10 shares. So 10 times 0 to 105, basically. You will receive like what, 10 shares, $2, let's say, I guess, yes?
Yeah, something.
But if you have 10 shares of Apple and you had them before February 5, but then on February 8, you bought one more share. So right now you have 11 shares. But because one share was purchased after ex-dividend date, you will receive dividends for 10 shares. But this one share that you bought too late, you will not receive on this one. But the next period, the next quarter, in the next 3 months, you will receive, unless you don't buy any more Apple shares, you will then start receiving on all 11 shares from now on.
Cool. So the payment date, that's self-explanatory. That's tomorrow. What about payment date? Yeah, what about the declaration date and the record date? Those two.
So declaration date is basically when they declare the dividend. So they basically, okay, so I don't exactly remember. I don't 100% remember what is record date, but it is whatever is needed is just ex-dividend date and payment. So
cool.
Yes, declaration date is when they declare the dividend. They say okay, on February 11, we're gonna pay 0.205 cents per share in dividends, and they declare it on January 27.
Oh, record date if I had to guess, record date might be when the next one starts for the next quarter.
Maybe. I don't know, maybe.
I think that if I had to guess, that might be what that is. But anyways, okay, cool.
But like I said, only thing you need that is the ex-dividend date, the first.
Right.
If you buy shares before this date, you will be eligible to receive dividends on payment date.
Yeah. Okay. Cool.
That's all the two dates that you need to know. Simple as that.
Nice.
Yes, declaration record date's not that important. It's just bureaucracy and stuff like this for accounting, bookkeeping purposes, basically.
Right. Okay. Cool.
It's not needed for us regular investors. And by the way, did you receive a mail from Apple to participate in shareholders meetings in the?
Yeah. I see those emails come through. Mm-hmm.
No, but did you receive actual mail, paper mail?
I mean, I think I got an invitation through Charles Schwab, through my broker who I own my Apple. I think they sent me a digital type of invite. I don't know if I've seen a mail copy, but I did see, I did get an invite to the meeting because I was a shareholder, and it said, if you want to come, here's the time, here's your login code, all that kind of stuff.
Because I actually received actual paper stuff from Apple, and it says you're a share owner. You're invited to the meeting, like so cool, basically old style and everything.
That's tight. I like that.
It says exercise your right to vote. It says meeting information, share owner, Apple Inc. and stuff like this. So like all this old style stuff. And it's the first time I receive anything like this.
Oh, that's cool. That's fun.
Cool. We'll participate in Apple's meeting just to see what's this, basically. And then I can tell how's it. So yes. This was the dividend stuff. I will share again the presentation and stuff. So just two numbers. Ex-dividend date, you need to buy shares before this date in order to receive dividends on these shares whenever it's payment day. And that's it. Simple as that. All the other is just bookkeeping purposes. Not that important, let's say so. Okay, so in order to receive dividends, like I said, you need to hold stocks of a company for a certain period of time. And I would better say, in order to receive dividends, you need to hold stocks of a company before a certain period of time. I would even say to make better sense, which means that you need to hold them before ex-dividend date. And all the stocks that you have before ex-dividend date, it means that you will be eligible to receive payments on the payment date, and basically simple as that. Okay, average unit yield is around 2%. It's basically if you buy VOO, the whole ETF, I think it's like 176, 170, 180. And dividends can be paid monthly, quarterly, annually, with quarterly being the most popular payment, whatever it's called, installments, payment structure. Quarterly is the most popular. There is one REIT, O Realty, I don't remember, but the ticker symbol is just O. And it's one of the most famous investments, one of the most REITs that pays dividends monthly. But it's like literally the only company that I can remember right now that pays dividends monthly. All the other companies that I have, they all pay quarterly. Okay, so investing for retirement. The best goal for investment is retirement. Start investing since young age. We both do it, so good, like it's self-explanatory. Retirement investing should always be long-term. Like I don't think it's possible to be a day trader for 40 years straight, successful day trader, and then retire in more wealth than just a regular person who just invests in, VOO ETF. So basically just invest in index funds, invest in good companies, do passive investing. Like I said, ETF investing is the best, but we just like to play around with individual companies. That's why I invest in individual companies. But just ETFs is good, no hassle, 2 million per month, and you will retire more rich. You will retire richer than any other traders, Bitcoin miners, anyone like this, like almost like 95% possibility. You can't make retirement portfolio in a couple of years. I guess this is also pretty self-explanatory. Like unless you're extremely lucky, unless you somehow have insider trading. Like I don't know, if you invested in this GameStop stock, right. So if you invested $100,000 that you saved like during your whole life, and then it's up 900%, you will still be like $900,000. Like you will just be like you will just make your money times 9, basically, which is still a lot of money, but not as much if you just passively invest since young adult ages, like I don't know, couple of thousand per month, 1,000, 2,000 per month. You will still be able to beat this person just invested luckily in GameStop and made his whole retirement portfolio in a couple of weeks. And you need more money in retirement than you do now. So right now we just need what, like, I don't know, food, rent, I don't know, groceries, I don't know, stuff like this. But retired people, obviously, most of them are old people, so you need like a healthcare, you need doctors, and you know, in the US, medicine is a little bit expensive to say the least. So basically, when you're older, you will need more money than you need right now. So right now, you might be spending $2,000 per month, and this is kind of a lot for you. In the retirement, also because of the inflation, by the time you retire, 2,000 is not going to be 2,000 anymore. So by the time you retire, you will be spending, I don't know, $10,000 per month, and this will be like your bare minimum expenses, because you will have maybe your mortgage, maybe your kids' mortgage to help them to pay with, a couple of cars, I don't know, dogs, animals, pets, kids, like grandkids, medical assistance, medicine, like, I don't know.
Never ends.
So basically, yes, that's what I'm saying. You will need more money in retirement than you need now, and you need to start preparing it since the beginning for the retirement, obviously. And there are different investing accounts. Different countries have different investing accounts. Take advantage of tax beneficial accounts. Obviously, first of all, in the US, these are traditional Roth IRA, which is the TFSA in Canada equivalent. Basically, I guess you already know what is Roth IRA. You just invest money. I don't know. I'll maybe upload this on YouTube. I'll need to edit first, like 15 minutes of pure black screen. Doesn't matter. But just for the purpose of people who will be watching on YouTube, I'll explain what is Roth and TFSA really quick then. So
right, what you got two TFSA for you and your wife?
Yes, we both.
Do you have any other brokerage accounts after that or not?
We have RRSP, which is the retirement account, but we are still not maxed out with our TFSAs. This year we had another 6,000 each limit more, basically.
Right.
So I don't know how long we're going to be in Canada. Like, if you remember, maybe we will move to Florida eventually. Let's see how it goes. So for now, we are still not maximizing. We still haven't maximized our TFSA contributions. And I think we have like 18,000 each, something like this, which is a lot of money. So we're still working on our TFSAs. After this, after we max them out, I'll see, maybe we'll just do regular investment account, because this RRSP, this is basically retirement account, which penalizes you if you withdraw money too early. So most likely going to be, I'll just maybe open just a regular investing account, and then that's it, like, not a big deal. I'll pay my taxes. You can do it all online, so it doesn't matter.
Right. Yeah, that's cool. We have our own separate ones, and then I was thinking if, like I said, maybe opening another one on the side just to have like a little bit of dry powder, kind of, if I like start saving a little bit of money bulk, and if something goes nice on sale, be able to swoop in. But honestly, sometimes it's tough just to max out the retirement one too. So we'll see if I get to that point. We'll see what kind of year I have. But yeah, that's cool, man. Good to know what you thought about that and where you kind of stood. And I'm kind of in the same boat. If we end up maxing them out, we'll get to that later. If we cross that street.
We will eventually maximize our TFSAs. Our monthly contributions are more than they, let's say, so supposed to be, if we want to maximize them exactly every single year. So we're just picking up the speed because we opened them later than we were supposed to. So now we have some room for growth, room for contributing more than average, more than we were supposed to. But like I said, it's okay. It's all under control. All good. So long story short, Roth IRA is the exactly equivalent of TFSA, and it works the following. So in the following way. So every single year you have contribution limits. I know, like in Canada, this is $6,000 every single year. And these limits, they stack. So right now, like, it's 6, next year is going to be 12, then it's going to be 18, 24, 30, and so on. But every year, the government can either increase the limit or decrease the limit. So like 3 years ago, it was 5,500, something like this. Like 3 years ago, it was 10,000, and so on and so on and so on, basically. But the idea is that every single year, the limit room is increased. And basically, this is the money. If you're investing through TFSA or Roth IRA, these are the money that are absolutely not taxable. So whenever you receive dividends inside TFSA or Roth IRA, whenever you realize capital gains, which basically means selling for higher price than you bought this for, you do not need to pay taxes on this, because obviously if you're investing through a regular account, you receive $10 of dividends, you need to pay taxes on these $10. If you bought stocks for $200 and you sold them for $250, you need to pay taxes on this $50 difference. Nothing like this in a Roth IRA, nothing like this in TFSA. Everything that you make inside these accounts is tax-free. Also, you need to maximize your 401k contributions, obviously, because the employer matches your contributions. So basically, I don't remember what's the contribution limits in 401k, because when I was in America working, I was not about finance or investing at all at that time. So I don't remember. But let's say, so if they offer you 5% deduction, salary deduction that goes towards 401k, it means that you will have actually 10% of your salary going towards 401k, because employer matches this, and this is literally free money. So you need to maximize it as well. All because right now, like I said, you don't need as much money as you'll need in the retirement. So right now, this extra 5% that you're deducting from your salary is not going to affect you much, but this will make a big difference in the future. And spend some time and learn different benefits in your country. This is once again for those people, those one person maybe who is going to watch on YouTube. So if you're from another country, spend some time, because obviously I cannot know about every single country. Just spend some time, see what else tax benefits you have in your country relatable to investing. And that's it. I thought I had a couple of more slides, but looks like that's it.
Sweet, man.
Okay, so
very good chat.
Yeah, this was it for today, I would say.
Good seeing you again, my friend.
Yes, so every Wednesday, 2 p.m. from now on. So today was a little bit too long, but since you said you don't have classes today,
yeah,
okay,
it worked out.
But yeah, usually we'll try to keep it so you have enough time to go to your class. So we started finish around like 2:40, 2:45, like we've always been doing, basically.
Sweet.
This is how it's gonna go from now on.
Cool, man. Awesome. I'm gonna go grab lunch, and you have a nice Wednesday. All right.
You too. Have a good day.
Hey, good luck with your investing, man. You're on a good path right now, for sure.
Good luck to you. Good luck to you as well.
Nice developments, bro. I'll see you around.
Yes, see you. Bye.